to start the stream.
Just got a message asking, BZX live stream now? From Adrian Starr.
Yay.
So, are we live?
We are recording, and I'm attempting to go live. Sharing a page I manage. DeFi Nation.
And then,
yes.
And then you have to share from that group into that page into the group.
Yeah, I've got all the posts lined up for that.
Yeah, man, looks like we're live. Are we live? Can the peoples, are the peoples here? Peoples.
Nearly live.
Excuse me. Can I see everyone at once? There we are.
Cool. So it's speaker sees speaker gets the screen style.
Okay.
Title for this stream. I can share my groups.
Are we live right now?
Not quite yet. I'm just.
So is the beeping coming from Vietnam or the Philippines?
It's Philippines.
I
see. It's
a
Filipino cafe.
They honk just like Vietnam.
No, I'm not sure why he's honking. That motorbike isn't even moving. It's just parked and then he's honking it.
I see. I remember in Vietnam, people would be going down like empty streets at 2 in the morning, just honking the whole way. I'm like, ooh.
Yeah.
All right,
I exist.
We are live-ish. Wait a second.
Live-ish.
Setting up.
I'm already live.
Redirecting to Facebook Live page. Huh. Don't know if it worked because
I can look on my.
It says meeting is now streaming live on Facebook on mine.
Yeah, on my. There. Yep. It seems to be working.
I'm live.
I've lost the controls, but it is working. Yes, your hands are going back and forth. Yeah.
Very good. Cool. So should we kick it off? It sounds like it's working, Tom.
Yeah.
Awesome.
Go ahead.
Awesome. Well,
I'm gonna start sharing the socials, and let's go ahead and kick it.
Yeah, let's rock and roll while you get that going. So yeah, great to be here, DeFi Nation. I'm Clayton Roche. I'm the head of community development with UMA, and joining here with Tom Howard, who is the founder of DeFi Nation, and also with Kyle Kistner, who is the founder of BZX. Actually, co-founder, founder.
Co-founder, yeah. I was gonna say.
Okay. Yeah, so awesome to have you back on, Kyle. You joined us for an interview. We were trying to figure it out. It was like 6 or 8 months ago, somewhere in that neighborhood.
I think it was around the time that we launched Fulcrum, probably.
Yeah, it was right around that time. Yeah. Around. Okay, perfect. So yeah, so that was awesome. And then of course, have had some, had that exploit, I don't know, 4 months later or something, somewhere in that neighborhood.
It was 8 months later.
8 months later, okay. Yeah, I remember it was right around ETH Denver that stuff started to go down.
It was during actually. It was the night of the first day. Right. Yeah.
It was like an after party event, right? As I understand it, I wasn't there, but.
Yeah. We were at one of the after parties. It was like already 11 o'clock, and we looked at our phone, and we were just checking out the stats page, just because I don't know, for some reason that's what we do at parties, and we noticed the utilization rate was very high on the ETH pool, and immediately I felt like something was wrong. Some of the team members said, well, somebody could have taken out a large loan, and I said no. They did something that's a fake loan, and we gotta check that out. And so we just like rushed home, sobered up, and got to work.
Yeah.
So we worked tonight, we worked with Sam Zizi's son, Lev Livnev, and Palkio, people from Symbolic Capital and all that, just trying to crack what was at the time the most sophisticated sort of, I guess, DeFi transaction that had ever been made, because it composed so many protocols and used technology that had just barely been out for a few months. These flash loans.
Sure. So we'll definitely come back to that. I don't want to like get us lost in that, because there's also like some exciting news to talk about as well, which is the version 2 launch. So it's kind of like, as I understand it, my impression is you guys kind of like, you took what happened, you kind of went into quiet mode for a while and worked on things, and now you're back with version 2. So I think like this is a good time to understand what's going on with that. I know you just had a token listed, yeah, presumably have some observations and reflections to share, between V1 and V2.
Yeah, for sure. So yeah, we made the conscious choice to take the protocol down. Unfortunately, a lot of people do look at our DeFi pulse chart and they go, "Oh, I guess BZX never recovered. Look, they're just bleeding out, and that's right. The end of them. Why are they even still here?" But we took the protocol down and we paused it, and so as people pay back their loans, value leaves the protocol. And we've just been focusing on refactoring the code, getting it very cleanly documented, getting the kind of tools, security tools that would really help us have the kind of depth that we need. So like we're talking like static analysis, like Slither. We're talking symbolic execution, like Manicore. Talking fuzzing, like Echidna. So we're using a lot of the Trail of Bits tools. We're using MythX tools. Because what we found is that actually, like, you can use one, you can use like one symbolic analysis tool, but if you use multiple, they actually have like non-overlap. They actually have very significant non-overlapping coverage. So we're doing that. We're refactoring, and then we're putting it down. We're getting a lot of security audits. So, I remember, like, most security audits are probably more in the range of maybe like 4 weeks to maybe like at the higher range 8 weeks of person hours. There's been exceptions, like Maker's first audit was 20 person weeks. Compound's first audit was about 12 person weeks. But generally, audits are sort of lighter on the person weeks. But we're getting 2 different audits, both around 12 person weeks apiece, plus formal verification. So we think that that's going to put us closer to the top end in terms of the amount of professional security time that has been dedicated to it. And we're also going to be, putting up a very large bug bounty. I think that was one of the biggest lessons that we learned, was that, if the bug bounty is large enough, it's so worth it. Like right now we have protocols that are securing, like over $100 million, and the bug bounty is still 6 figures. Does that make sense? No, I think that, you need to scale the bug bounty with the protocol. So that's something we're looking at and doing, and we think is like an important lesson. Having the incentives be right for people to report the bugs rather than execute on them.
Okay.
So yeah. Oh, go ahead.
Nice. So Kyle, like, something that interests me about this situation is like, this is DeFi. We're not supposed to trust Kyle. Like, that's not even the point of DeFi, right? So like, it's a really interesting thing where like BZX had this thing happen. Some people have a bad taste in their mouth about it. And then, you guys are kind of relaunching and having to address kind of what happened. But like, there's almost a way in which one could think of this as just a brand new launch, I think. Like, I'm not speaking from a technical standpoint. I'm just speaking from the matter of fact that like trusting Kyle isn't what this is supposed to be about either way. So like, I'm curious, maybe just as a DeFi user, how do you separate those things? Like trusting the person, knowing their brand or their reputation personally, but then like the contracts are supposed to speak for themselves. The audits need to be sort of impartial. How do you kind of make that decision?
So I do think that it's not completely wrong to, if somebody does have a track record of writing insecure code, and nothing really changes about the way that they're operating, I don't think it's wrong to weigh that. But I also think that the primary mistake people are making is that they are thinking that bugs are about people rather than processes. So what you really want to know is, what is the structure? Like, is the code fully unit tested? Is it cleanly commented? You know, is there a continuous integration, continuous deployment process? How many hours has it been audited? Is there code reviews? What's the process for pushing new code? These are the things that we really need to be looking at, because it isn't, like, as you said, you know, it isn't about trusting Kyle. It isn't really about the people. Bugs happen when you don't have the proper safeguards in place. Like, you know, the first thing that happened was like a very, like, almost a typo level bug. It's not a typo, but it was a very minute kind of bug. These kind of small errors, if you just have a few people working on it and you don't have enough audit coverage, you don't have the processes in place where there's the code review, continuous integration, deployment, the kind of checks when you're trying to push to the branch, everybody is going to make some mistakes sometimes. The question is whether or not the processes are in place to catch it. Like, the people who launch NASA shuttles, they're not being trusted to always get things right perfectly every time. What we're trusting is that there is a process in place that's extensive enough that the imperfect people underneath this process are going to still produce perfect results.
So we chatted a bit earlier how it was a bit of a blessing in disguise for you, because now you're able to go back and completely refactor your code base and write it the way kind of that you, after all of your learnings of launching it and having it in the wild, write it the way that you wanted to write it if you were going to go back and do it the first time. And that can be a bit difficult to upgrade something that's already kind of up and running, as we can see with Ethereum and like the coming ETH2 upgrade that's been continuously delayed because it's so decentralized already, right? So yeah, I think, you know, I think it's cool that you guys have this opportunity to kind of start the V2 somewhat from a fresh slate. And I'm interested, what is up and coming in V2? Like, what are your new features? What are you excited about in V2?
Yeah, so like if you even just look at the contracts from V1 versus version 2, you'll see there's actually quite a stark difference. And part of that is the fact that when us building V2 started from a base of building on Ethereum for years already. One of the things we're really excited about for V2 in terms of features is, for example, like, and this isn't even really a feature, but V2 is almost twice as gas efficient, or actually more than twice as gas efficient as version 1. So that's one huge thing. We're integrating Kai Token, which is like the new gas token the 1inch guys came up with. We have some really in-demand features that we had been getting like requests for over and over again. So I think like the killer feature here is really collateral management. Fulcrum got to be such a hugely popular trading platform and for margin trading, and nobody was allowed to manage their collateral, surprisingly enough, to avoid a margin call. So we're really excited about that. We've really increased like the throughput and scalability of the system by having a backup liquidation procedure. So we're excited about that. Let's see, what else? And then the other thing is like trade history. So before, like when you do a trade on Fulcrum, it was a little bit unclear, like how much profit you had, where the fees were going, the slippage. And then if you did several trades, you were like, oh, how did all of those trades before add up? And we didn't really have the stats, the like read-only kind of information that we would need in the blockchain to really give this sort of full-featured, like, hey, here's what's happening with your position. Here's the whole history of it. So we had a lot of, I'd say like the two biggest pain points that people repeatedly came to us for, or let's say the three biggest. The three biggest were, I can't manage my collateral. I don't know what happened, and it's costing too much gas. And even with these problems, people loved it. I think we had probably the most user retention of any protocol out there because nobody knew us and we were at the top of the charts. So with these things solved, we're actually really bullish on the future and like people using it a lot.
Kyle, I'm curious about, so like, I see it, so you were talking about the trading piece of it. I'm much more of a lender, and I like to earn interest. And I'm also very conscious of composability with these interest-bearing tokens like A tokens and C tokens. Of course, we have comp mining going on. Aave has been doing lots of like community building and integrations and with their A token as well. I'm just kind of curious, like, do you feel like you're going to be like swimming upstream for a while? Like, how are you going to kind of catch up in terms of bandwidth and mind share and these kinds of things? Like, what's your strategy there?
You know, I think we're going to make a really shocking comeback very quickly. And part of it is that we actually have some surprising integrations already lined up. You know, I don't want to say too much about it, but just this one that's coming up is enough to just change the game completely. So yeah, we're very confident that like, yes, there was all this community building, but we actually went from like people not knowing about us at all to being popular and used while people still didn't know about us. So, you know, like they've done all of these things and we think, you know, they've done great and they have great features, but we are very confident about our product market fit. On the lending side, I'll say one thing we did add that was not there before is now you have the option to earn interest on your collateral when you are borrowing. So that was actually not something we offered before, which was a huge benefit to us from a security perspective. It actually caused the amount of ETH that was vulnerable to the attack to be cut down by it was like if we had that feature in, the attack could have been like 6 times bigger. So it was very useful for us before, but now we're giving people the option and they should be aware of the security implications of it. So it's not just our protocol, it's the other protocols too. If somebody figures out how to drain you know, the free liquidity, your collateral could potentially be in that pool. So that's one difference. And we are excited about it as a feature because we know people like it a lot. And we like that we're giving people the option and kind of drawing their attention to the security aspects of choosing that feature.
I see. I know Tom has got lots of questions about the token sale that just happened, but I had one more question for you, Kyle, which is, so like in the UMA's Discord, like the when Binance question has changed into when liquidity mining. And I literally before this call had that message in the Discord, when liquidity mining, you know? So Kyle, when liquidity mining?
Yeah, so liquidity mining immediately upon relaunch, we're going to be dispersing a huge amount of fees to users. So it's going to be 0.25% of the total supply is going to be dispersed to users in the form of a vesting token. So that vesting token represents partial ownership of the BZRX that's inside this 4-year vesting contract. So that's going to be the first 3 months, going to just keep hitting 0.25% every week for 3% in total. And then we're going, every time you trade, you get a kickback on the fees. Every time you borrow, you get a kickback on the fees. As you keep a loan open and you're paying interest, you get a kickback on the fees. So what we're trying to do is we're trying to have it divided into 2 parts. The first part is the liquidity bootstrapping. So like a protocol like Compound, did it really need to bootstrap liquidity? Like, was it not liquid already? We think probably it was actually quite liquid. So like if we were in Compound shoes, we might not necessarily have done the same program. But since we're relaunching and we will need this injection of liquidity, we're going to definitely try to bootstrap the liquidity. And the second part of it is trying to make protocol rewards sustainable. So we want to kind of complete the circle here. So we want money to flow in and money to flow out in a way that's proportional. You know, we don't want it to be a subsidy. We want it to be a way of making the protocol sticky. And that's kind of the way we think about it. The more you trade on Fulcrum, the more ownership of Fulcrum that you take, and which makes you more likely to want to trade on Fulcrum. But it doesn't distort the market with subsidies in the long term.
Moving on to the BZX token, you've gone through a couple of iterations on like what your governance token looks like. I think the last iteration was a tokenized insurance fund. Can you talk a bit about the new design and kind of how does that governance token look like now?
So yeah, our initial design of the token was basically the BZRX model. We were taking a lot of inspiration from BZRX at the time, where it was a medium of exchange and a governance token. You know, back then it was 2017. We were trying to integrate like a BZRX style order book into BZRX relays from margin lending and trading and all of that. Later on, we kind of had this idea because we really wanted to have a sort of like non-extractive value accrual mechanism. So we thought, okay, there's this big pile of money that's accumulating in the insurance fund. Maybe somehow people would be able to tap into the value of that without extracting it. And what we thought was, okay, if we make it so that your token can be redeemed for a proportional amount of that supply, it means that the value of the token is going to continuously reflect the growth in the protocol. And not only is it going to have that redemption price, but it'll also factor in the future discounted cash flows that come into the protocol, which means you wouldn't want to redeem it for the insurance fund. You would want to keep it or sell it on the secondary market because you wouldn't want to give up the discounted cash flow portion of the valuation. So we thought, okay, this is great. It accrues value, but it also kind of incentivizes people never to redeem it at the same time, but they could because it is asset backed. So we really liked that value capture mechanism, and it's still part of the token because why not? We do have this insurance fund, and it's going to be there either way in order to keep assets safe in case something does happen, like there's some sort of counterparty risk due to Oracle or network congestion or something like that, right? So the third part of our token model was to say, okay, right now the protocol is generating some fees by being a Kyber affiliate. The ecosystem is maturing and fees are starting to be part of creating a sustainable business on the Ethereum network. So we said, okay, we're going to add fees, but we want the fees to somehow accrue to the token holders, and maybe we can use this as an incentive mechanism to participate in governance. So there was a sort of like a 2.5 where we were kind of scoping out the governance model, and part of the governance model was that there was going to be inflation of the token in order to punish people who weren't participating in governance and reward people who were. Once we decided to add the fee sharing, we realized that, okay, this can be used as the incentive to have people participate. So we don't actually need this inflation mechanism. The amount that it's like the amount of participation on top of that it would engender, we didn't think would be very much, and the amount of value captured from the non-participants to the participants also seemed kind of marginal. So we tied fee sharing together with staking to representatives. So we have this like sort of trias politicus model that is very reminiscent of what you see around the world in various liberal democracies. There's a legislative composed of representatives who require a majority vote to pass proposals. And then there's an executive who can accept or veto proposals, and they can be impeached by a unanimous vote of the legislative. And we sort of regard the judicial as the EVM because code is law. So We have that. We have the protocol disbursement program, or liquidity mining, as you call it. I guess you could call ours like fee mining, because we're not really asking people to contribute liquidity except for those first 3 months. So it really is a different schema altogether. But people do sort of recognize this meme of like, I use your protocol and I get paid. And so in that sense, it is liquidity mining.
One interesting thing to note about that is, you guys are basically offering like fee rebates in the form of the governance token, and that might encourage like more trading. But for the liquidity providers, that means that they're actually earning more fees and they're earning more of the funding rates. So it still benefits the liquidity providers as well.
Yeah, exactly.
Cool. Clayton, do you have any more questions about the governance token?
They'll probably come to me specifically about the governance token. I was curious about just to kind of put this in like very simple terms, like for DeFi Nation people, like let's say I have some funds and I want to be a liquidity provider early on and earn some of these tokens. Just kind of like, what's the process there? I'm also just kind of curious, like, it doesn't sound like you would have enabled the winding up of leverage the way that you can do with Compound. Yeah, because that isn't actually a practically useful thing. But I'm just curious, like, let me just ask the like no-brainer question of like, what's my APY and BZX token is going to be, that kind of thing. Like, the annoying question.
How do I yield farm BZRX?
How do I yield farm? Sorry, you're gonna get the question, so might as well come from us.
Well, I mean, I guess if you want the most straightforward way of yield farming, it would be to repeat it. It would be, let's see here. Yeah, it would be to just take open positions, keep them open, and keep paying fees on them. I think that's probably the most straightforward way. There's not going to be a way to hack it, so to speak, where you're, like looping around. I will wait to see exactly, how it turns out, because there are some pretty creative people out there. But as far as I know, there's not any like very straightforward ways of hacking it. And lending doesn't really do a lot for you in terms of sort of like mining the fees. So I mean, I guess the answer is just generate as much fees as possible. You can, maybe the most straightforward way would be to just keep originating loans over and over again. Originate a loan, unoriginate a loan. If you get into a margin trade, you're going to incur like slippage and stuff like that. That's going to cause a lot of friction for you. So if you just repeatedly originate loans, then I suppose that will maximize your fees. But the liquidity mining rewards are going to be proportional to how much in terms of fees you're paying into the system. And the token holders are going to be very happy that you're just giving them a ton of fees.
Sure. And I'm sympathetic to that design. And I basically, if I understand you correctly, you're saying that the only way to earn these fees is to actually take a position, and which means to like actually use the thing, which I think is the way it should be. And that's also like the same thing when we're talking about liquidity mining and activity mining with UMA, it's the same idea. Like it's finding a way that you're actually incentivizing natural users and natural positions, people who might be a natural hold long or short or whatever, as opposed to doing something that's merely just sort of proof of capital kind of approach.
Yeah, so like for Compound, I put USDC in and leverage it up against Tether like 4 times. So I ended up with 4 times as much USDC on the collateral side and 3 times as much USDT on the borrowing side. And since I was paying fees on both sides, paying or earning fees, I'm earning Compound on both sides. I basically taken my money, 7x'd it, and then multiplied it by the fees, and I get all this comp. So it's just kind of like free money, right? It sounds like the what you're designing here is like, hey, you actually have to use the platform. You have to take some risk in an open trade in order to actually be a participant in this. Like it's not a free lunch. However, I think I have found a way to do it. So if I open say a 5x long on Bitcoin, and then I open a 5x short on Bitcoin, I'll be paying the funding rates on both with no market risk. So I think that could be a good yield farming mechanism.
Interesting.
Very good. Kyle's like, I don't know.
But yeah, I mean, I'll be paying fees, you know.
Well,
sure,
you know,
sure.
I feel like
also.
Oh, go ahead.
I was just going to say you're also providing orders, right? You're providing liquidity to the shorts and long market, right? So I mean that's valuable if I'm understanding how that would work correctly. Yeah.
Yeah. I mean my net position will be 0 minus fees, but yeah.
Yeah.
I think like the first 3 months will also be the most interesting because you have this larger pool that's being distributed. And so I think that first 3 months is where you're really going to see the outsized rewards for these kind of incentives.
Yeah, for sure. I guess if the most straightforward way to game it, I think would just be via the origination fees. So if you borrow and then unborrow, then borrow, then unborrow, there's like a 0.09% origination fee. So I guess if you wanted to do that, you would pay a lot of fees, and then you are getting rewards in proportion to the fees that you pay. So that's a way to do it, I suppose. I don't really see that as, I guess I will be curious to see if people actually do this or not. I don't, maybe it actually makes sense financially if the amount of BZX you're getting exceeds the fees that you're paying. You should just maximally direct fees into BZX. I think our token holders will be fine with that, given the fee sharing. So, you know, I'll be very curious to see.
Yep. Yeah, I mean, at a certain point, then the fees, the rewards don't outweigh the fees, right?
Yeah, especially if a lot of people try it, then it could end up sort of like everybody just kind of breaks even at best.
Yeah, it definitely favors the early adopters before, you know, the massive liquidity comes in.
And I actually don't think it's like a bad thing for a number of reasons. Like, for example, just pushing funds through the contracts is useful. Like that's good to like give it that, to give it some of that test of time effect, to give it that test of holding the weight of funds, to have people build that experience of using the platform, like just literally going to the website and knowing how it works. And then knowing in the future when they want to open the position, they know how to do it. There's that familiarity. There's just like the mind share that happens when people are talking about it and things like that. So like, I think there's definitely a real business case for a little bit of like the ability to kind of try to earn some like exposure free tokens, you know, as long as it's like at least a net neutral effect to the product itself. Ideally a net positive effect to the product itself.
Yeah. So yeah, I think my conclusion in terms of gaming it is that it's going to be risky. It's not going to be a clear cut, like easy, obvious arbitrage like Compound. Just because it's like, okay, if you're the only one doing it, free, easy, clear. But if everybody decides that they want to game the system, then nobody can game the system.
And everyone does want to game the system, so that sounds like good incentive design. I think that's like a very good premise to use as like a mechanism designer in economics, right? Like, given that everyone wants to game the system, what can we build that will work?
Yeah, it is pretty interesting in having. I guess I don't always see this sort of property of like. It only stops being exploitable if a lot of people exploit it at the same time.
It's interesting. It's like an anti-fragility kind of thing.
Yeah.
So Kyle, like you're launching this new project, like what question would you wish that I would ask you? Like what's kind of the cool thing you want to make sure that people hear right now?
What is the cool thing that I want people to ask me about?
Yeah. Like, what are you excited about, maybe from the product or even just the token launch? Or actually, this is something else too. You can take both of these questions and choose one, which is like, what are your comments on the token launch so far? Like, the token's gone live recently.
Yeah,
How's that going?
I definitely have thoughts about it. So like, I think like our actual core community absolutely loves us right now, because, you know, in their minds, we've come through for them. The people who were just coming to, like, just discovering us, just coming to this token unlocking, um, some of them do have some uh, less positive sentiment. So I will say, I think one thing that is underappreciated is that people call this like a sale or an IDO, but actually this is something completely different, because what we did was so the basic plan was we would just unlock the token and let the market take over. So we went ahead and we told, you know, our various backers and all of that, we said, hey, we're gonna just let the token go free. What do you think? And they said, finally, okay, great, let's do it. You know, but shouldn't there be some kind of liquidity? And we said, well, we don't have any tokens, so I guess you guys will have to figure something out about that. And they say, okay, we will. Well, you know, why don't we, you know, I'll put some tokens up. And the other holders said, oh yeah, I'll put some tokens up. We want to create a Uniswap pool. We want there to be some AMM liquidity to kind of bootstrap the process. So there's this sort of like, you know, I don't know, there's like a graph out there that shows like kind of like the maturation of the liquidity process, which, you know, starts at like a Uniswap AMM or a balancer pool, and kind of like gradually progresses to the point that there's centralized exchanges with market makers. So this whole like the process of bootstrapping liquidity. So we said, okay, that's fine. We can help you. We can help put your funds in Uniswap. You know, act as a trusted party to coordinate between all of you guys, and, you know, figure out a price and all of that, and we'll help. So that was basically the plan, but they didn't really want to sell their tokens, so to speak. They weren't thinking, oh, we're having a token sale, let's put it up on DutchX and have a reverse auction. They weren't thinking that. They weren't thinking, oh, let's put it on Mesa and have a batch auction for it. They were thinking, let's seed a Uniswap pool and then leave it at that. And we said, that's fine. We think that's something that does need to happen. And they were concerned that, you know, if that wasn't done, somebody would come and kind of troll the Uniswap pool by creating a weird price at a very small quantity, so that when liquidity was put into it, it would create massive arbitrage and basically just like be free money. So that was something we were concerned about and wanted to avoid, and just in general. So we went along with this plan. And I think what we saw, the reason there was some backlash is because, like, while everything did proceed in a way that's transparent, maybe there's some fairness issues at play, because there was the winning was concentrated with one person. I think a lot of people felt that they had information to contribute to the market. So like generally markets go through a process of incorporating all information and to create an efficient market. And they felt that the token was underpriced and they would buy it to contribute to market efficiency. And they felt by this one person coming in front of them and pushing all the information at once, that they were robbed of their chance to participate in making the market more efficient. And I think I very much sympathize with that. If you have something, if you have a piece of knowledge that you believe should make you money, it'd be nice if you were equally as able to capitalize on that knowledge as any other person. So, you know, if Uniswap had, you know, more like a batch auction functionality, was front running resistant, everybody who had, you know, correct knowledge that the price was going to go up would be able to contribute it, but rather only that one front running bot was able to contribute that information. They knew that the tokens were selling higher on the OTC market. They said, okay, the real market, the market clearing price is much higher than where it's being listed. I'm going to buy it up to where I think it should be, and then I'm going to make a tidy profit on it. Everyone else wished they were part of that too. And so, it's an interesting problem for us because the current solutions like Dutch and Mesa and all that weren't quite what people were looking for. They weren't looking for a token sale. What they were looking for was AMM liquidity, long-lasting AMM liquidity. And so, if there was a way to provide that to Uniswap and have people sort of like batch auction in Uniswap, that would be like probably exactly what everyone was looking for. Unfortunately, the front running caused a severe kind of imbalance in where the winners and the losers. The winners were concentrated mostly in this one bot, and it created a lot of losers. It would have been best if most people came out of it thinking, I'm a winner. And then that creates positive feedback loops. It's very healthy for the community. So instead, this bot sort of sacked energy and love from the community as a result of getting in there first. And, we think that that is quite sad. And, if there was a way to prevent that, I think we would. So yeah, I guess that's like the general thoughts on it. It's unfortunate. Nothing like non-kosher happened. This is just generically the way it works with Uniswap. One big difference I will say is in most of these IDO type things where a token is on Uniswap, the first person to buy is guaranteed a profit because there's nobody that can sell into them. In our case, we actually didn't know if the price was going up or going down. We had heard people, talking about making a bot, and we advised them, we're like, if you do that, just know you can get obliterated. There's 135 million circulating tokens. If you pump that price up, they might all just rain down on you, and you're not going to make a profit. So I don't know how much it's appreciated, the sort of directional risk that this person took with their funds. Unlike other IDOs, there was not a risk-free profit if you got in first. So yeah, there's a lot of aspects to it that I think are not fully appreciated.
I want to dig more into that because a lot of this is just how Uniswap and bonding curves work, and it actually has nothing to do with BZX or you guys at all. As you said, like in previous Uniswap listings, like all of the tokens that were kind of being released for the first time were in that Uniswap pool. And because of the way the bonding curve works, it's actually impossible for the price to go lower than the original price that they were listed at, right? In this case, that was not the case. This was actually a price finding exercise. And Uniswap and bonding curves are very good at finding price. This one bot bought up about 1 million tokens, right? And so that's less than 1% of the total circulating supply. And you're absolutely right that like he could have been dumped on, and in fact, I think he was a little bit dumped on because after he got the price up so high by buying so much so quickly, it did fall a little bit afterwards, and it kind of stabilized at about the 20-cent range. So yeah, I mean, this was just a proper, this was just a regular trade.
Yeah, I mean, it was basically like we left a big arb on Uniswap by having the listing price be different from the market price, and somebody, somebody believed they knew what the real market price was. They built an arb bot, and they did what happens on Uniswap. They arbed the price.
Yep. And then you get into this like kind of niche part of DeFi where you have this like bot on bot competition, and everybody's trying to code the most efficient bot that like gets their order through before the other bots. And so there's all these different techniques for that. And I think like anybody who's been watching these Uniswap initial kind of listings knows that the bots are going to win like the first block. So like, don't even try to get in the first block. But like, yeah, another thing I noticed, I was on Twitter commenting with some folks about what was happening it turns out that, the one guy that was kind of like pointing out what had happened, his bot had failed, and then, he ended up buying the top, and the price went down. So he felt like he kind of lost out doubly because he missed, his bot missed it, and then he kind of bought the top. So that's unfortunate. But it's not a loss until you sell it. So I think the future of BZX is bright.
Well,
the other thing I noticed,
it's also the risk he's taking by doing that, right?
It's just trading risk.
Yeah.
There was no hacker exploit here. Like, it's just
sure. Like, it's unfortunate. Yeah, exactly. So I mean, like,
he's a security auditor, so like he knows the risks.
Sure, and to some degree, like, yeah, like not everyone can build a bot, so there's like definitely like a smaller subset of people that can participate in this fashion in a Uniswap listing. But especially as that gets more efficient and there's more people doing it, there's going to be more risk associated with it. The person who buys the 1 million tokens may or may not buy at the top. Like there's going to be an efficiency that comes to this kind of listing as time goes on.
Yeah, we're focusing on all the bot winners, but we don't talk about all the bot losers. How much money was, like, how many bots lost how much money? And then the other thing is, there was a sort of misconception that that somebody like basically clogged the entire Ethereum network in order to make sure only their transaction would get through to buy first. And I think, that wasn't what was being said by the original person who said it, so to speak. They were just saying that they were trying repeatedly their transaction. They weren't saying that they were censoring Ethereum for a minute, but because I mean, that would be absurd. Like, how much money would it take to make sure, like, our sale was like 30 minutes delayed. How much money would it take to censor Ethereum for 30 minutes? This is not like a very, economically feasible thing.
Yeah, that's right. That was just that bot that was just making a lot of attempts in hopes that one of them would get through, which many other bots were also doing, because they all have these strategies. And part of the reason that guy got through is just pure random luck, really, because there's all these different bots are trying to get in at the same time. One comment I noticed in my Twitter feed was this user who has a Binance logo as his Twitter picture, and he was looking at the price that first sale went through at, and he noted that it was higher than the kind of like initial pool price. And so it made me realize that a lot of folks, particularly if they're just coming into DeFi now, from maybe the more like Binance, layer 1 token crowd, they don't actually understand how bonding curves work yet, and they don't understand how automated market makers work yet. And so there was a little bit of unhappiness there, like, you guys are lying about the price. Like, it's very clear that the price was higher than what the initial price was supposed to be. And like, it's interesting because like that's actually not even anything to do with you guys. That's just how Uniswap works. That's how the smart contracts work, and it's all there and transparent for everyone to see. But it seems like we do have more work to do on the education side, teaching people about how AMMs work and how bonding curves work, because it's kind of becoming from this niche within DeFi. We've all been in this space, deep in DeFi for the past 2 years. And like, not too many people have actually been looking at it from the outside, and now it's starting to get more attention from outside the DeFi community. So yeah, we've got some work to do.
Yeah, it's interesting. A lot of people are fixating on like our team's role in all of this, but all we did was help out our pre-sale holders do what they wanted. Like, we unlocked the token. That's all. We acted as escrow, but like, they're like, oh, the team is lying about the price. We're not even selling a token.
Yeah. I mean, let me ask you this. Did you call up like Vitalik and get him to change the numbers on the blockchain for you? Or like, yo, Vitalik, can you change the Ethereum blockchain for us? Yeah, it's all out there. It's all transparent. One thing I want to move on to is this kind of like innovative model that you have with your vesting tokens. So you have 12, 13% of your tokens that are unlocked and in the circulating supply. And then the rest of your tokens are in this 4-year vesting contract. Can you tell us a bit more about that?
Yeah, so we kind of realized that there's this sort of positive feedback loop that you get by just emitting a very small amount of the supply onto the market initially. And, you know, it creates a sort of marketing feedback loop that gets you more attention and all of that. And so we realized that if we wanted to drive attention to the project, the best thing, and, you know, kind of get us back for our relaunch, get hype, get excitement around us for our relaunch, the best thing we could do is sort of just like restrict the supply maximally. So we took all that, we realized that the crowd sale has actually very toxic dynamics for not just like existing holders, but also us. Because once you have that crowd sale, like, okay, yes, like you as the company have made a ton of money. That's great. But like very likely, like people are going to get hurt financially after that, as there's just this whole supply and then people dump and all that. And then you're never going to hear the end of it. And it's not going to be good marketing for like really the product at the end. We realized, okay, let's put this in a vesting contract. Let's just take all of this supply that would have otherwise been floating around. Let's just shove it in and make sure it takes a very long time to come out. And so, you know, this seemed to have generated a lot of excitement and attention to the project, which we believe is going to be really important for the product as that launches. So these vesting tokens, right? They represent a share of that contract. So, you know, if you hold one of these vesting tokens, when your token vests, you can claim it. And all the fees that the token generates are vested at the same time. So yeah, apparently nobody else has done this before. It's another first from us. It seems like a pretty interesting concept. We think there's, you know, obviously, you know, trying to get financial backing and selling people on vesting tokens, it's still a tough sell, because they're like, well, I don't want to be locked in for 4 years, but, you know, it does provide some flexibility. For example, when we pay ecosystem rewards, we can pay in the vesting token instead of the actual token. And we actually have a better shot at aligning people long-term while also preventing the rewards from having like a persistent and immediate negative impact on the price, which really does hurt from a marketing perspective. So, you know, we only look at this from like, how do we get people's attention and how do we get people using the product? But it's important not to generate like negative publicity from red candles in this community. That is just how it is. So we have to think about how do these token economics impact the marketing, which downstream impacts the use of the product.
So one thing that's very interesting about this vesting token is that it's completely unlocked and tradable, and so it actually acts a lot like a future because you have this token that represents the future delivery of the underlying token, and it's a delivery that happens over a 4-year period. So it ends up being a bit like a multi-expiry future.
Yeah, exactly.
So it seems like there's also, you know, there's a Uniswap market for the BZRX token, and so you know, theoretically there probably will be a Uniswap market for the vesting BZRX token, which will trade quite like a future. If that makes sense.
Yeah, we definitely think that there will be, you know, especially as ecosystem participants and, you know, fee miners get the rewards. We definitely expect that there's going to be some trade in this token. Obviously, it's not as desirable as just having the actual token itself, but it's still pretty nice because it's still working for you. It still does give you at least some power and governance. It's not a full governance vote. It's about half. We did that for structural reasons to deprive ourselves of the ability to like have a majority vote. So going forward in the governance, our sweet spot for governance is having between 33% and 50% ownership of the tokens. If we drop below 50%, this ensures that we can't unilaterally change things on the protocol. It has to go through the DAO. But if we drop below 33%, then we can't vote, like we can't basically have a representative that we, can get to vote our way in case somebody wants to expel us. So, there's a sort of possible 67% attack on the protocol, where if somebody gets 67%, they can get all 3 reps, vote us out, put themselves in, loot the protocol. So we don't want that to happen. And we think it's important to keep our ownership above 33% and below 50% to kind of prevent this.
Nice. I like the vesting token. I think it's an elegant design from what I've heard of it. And I did not know that. Like Tom had explained it to me, but I didn't know that piece around the partial governance impact of having that vesting token. Yeah, that sounds like an elegant design and something that, if it's effective and useful, I think we could certainly expect other projects to emulate in the future.
I think it gives projects a lot of flexibility. Like, so here's the thing, right? Like, in a sense, like, this isn't completely new in a way, in that, like, before people have had tokens investing contracts, right? But usually instead of tokenizing it, they would use legal contracts. They would trade it that way. So the market for vesting tokens has sort of always existed. VCs have bought, vesting tokens via contract many, many times. So it's not that like we like created a market where a market did not previously exist, but we did just make it more efficient and able to sort of like be composable with the blockchain. Yeah.
Cool. We're getting towards the end of the hour here. Personally, I'm super excited for the launch of V2 and all the liquidity mining incentives and the new products. What is the timeline for that? When can we look forward to using Fulcrum V2?
End of August.
End of August. Nice.
Yeah, and we're coming out with like a pro version of the trading platform. Before it was like kind of more geared towards newbies. So when I sent my friend who I wouldn't call him a professional trader, he's like a professional market maker. I sent him to the platform and I was like, oh, can you use it? And he was completely bewildered. He's like, where are the trading pairs? I'm like, no. You click on the ETH with the green up arrow if you want ETH to go up, And he's like, what? But what is it trading against? I don't understand it. I'm so confused. And like, the thing is,
you need to give him an API, not an interface. Just be like, here's the API, hook it up to your trading system.
My dad is 79 years old, and he could figure out Fulcrum's trading, right?
Yeah, I love the interface. It's so easy. Yeah.
But my friend who's like a professional level person who deals with these interfaces, who works at a hedge fund, who like designs trading algorithms, he came and he was like, Kyle, help me. And I was like, what is going on? Like, how can you can't figure this out? But like a lot of people who don't do finance are figuring this out super easily. And I realized there's just these two mindsets. There's this professional, like I think in trading pairs mindset. And then there's this more simple, like asset go up, I want money type mindset. And so we're kind of catering to both now. And like, better charting, like responsiveness, real time, refreshing. Before, every time you wanted to know what happened with Fulcrum, you'd have to refresh. So all of these little things that were like kind of janky and really brought down the trading experience are gone. And like we've hit every pain point that people have told us about in the 8 months that Fulcrum was up. So we think that this is going to go off like just gangbusters.
Very cool, man. I'm very excited.
Awesome. Kyle, just wanted to share my closing thought, which is like, I remember hearing before that refurbished is better because when you buy like a refurbished laptop, the QC people have gone through and like they fixed whatever the one problem was that got it returned, and then they went through and they checked all the other things to make sure that they were good. Like it got a second round of QC. So that's kind of how I'm seeing the V2 launch. So I'm optimistic. I personally, go ahead. You look eager.
Oh yeah. No, this is such a good point because so like all the security auditing firms that we talk to seem like super eager to work with us. They're like, oh, you're BZX. You guys are very important to work with. We'll give you a discount. We want to work with you. We're super excited. We got in like, you know, just like initial audits, but like they're putting in extra hours. They're working on the weekend. They really want to get the security people really want to get their name on it. And they're like putting in double the effort because they figure out, okay, we're going to make our reputation on this. If we put our name on BZX and then it doesn't, and then it does get hacked, we're like, as a security firm, this is going to wreck us, right? But if we put our name on this, we go through this twice, 3 times as hard as we normally go on this, and we feel super confident, then we can be the people who said, hey, you know, we came in and we make everything secure. They feel like this is a way to bolster their reputation. So we are getting like, you know, this sort of like double, triple effort in terms of the security auditors. And it's really great. It makes us feel very comfortable and confident of what is going out there, just because there's like so much enthusiasm from our security auditors themselves.
That's cool. And on behalf of the DeFi industry, I thank you for taking one for the team on the flash loan exploit thing. You guys really got to alert the rest of the space about that particular problem. So appreciate that. Thank you for that move.
Always happy to contribute.
Yeah, awesome chat, Kyle. Thanks for joining. Yeah, I think we're about ready to wrap up. Unless Tom, you have anything else to add?
No, I think that's it. It's been a great chat and good to have you back on here, Kyle. And looking forward to the relaunch.
Yeah, thank you so much for having me, Tom, Clayton. You guys have a good one.
Cheers. See you, Kyle.
Okay.